Assalamualaikum warahmatullahi wabarakatuh. So today we are going to learn about part D of F3 financial accounting, which is in syllabus F3 syllabus guide is the recording of the transaction of event. So for today we are going to look at part of tangible of non-current asset. So before this, you already learned the definition of the asset, which is the resource controlled by entity due to the past event where economic benefits will improve. So we are continue with this definition related to the tangible non-current asset. So this is the part that you need to learn about non-current asset. The first one is the purchase of the non-current asset. Under the purchase of the non-current asset, you need to know what is the measurement cost of the purchases. So this measure a cost you need to record in the book of account in a business. And then after use of the non-current asset, we need to depreciate it. And you have two methods in depreciation of the non-current asset. One is the straight line method. Another one is reducing method. So for this syllabus, you will learn how to calculate the depreciation by using the straight line and reducing method. And we will record the depreciation charge for the year in the accounting entry. Okay, let's start with the non-current asset. So there is the difference between the current asset and the non-current asset. So this is the non-current asset. First one is the non-current asset is a long-term in nature, means that we will use it in long term. So this is not acquired for the resale. We acquired the non-current asset is for the use. So for the non-current asset, we have the tangible and intangible. So for the intangible, you will learn later, but for today, you are going to learn about tangible non-current asset. Okay, by purchasing of the non-current asset, the company will use this non-current asset to generate income directly or indirectly for the business. So this is normally not a liquid asset because we are going to use it. So it's not easily converted into cash. So for the non-current asset, so you need to know about these two, capital expenditure and revenue expenditure. So this one you already learned before, what is capital expenditure and revenue expenditure. So the capital expenditure is expenditure on the acquisition of non-current asset required for use in the business, not for resale. So you must get to the point that the purpose of inquiring for the non-current asset is for the use, not for the resale. Also, the expenditure on existing non-current asset aim to increasing their earning capacity. So after use for several times, the expenditure, the non-current asset will be loss in capacity. So the cost that incurred to increase its capacity can be considered as the capital expenditure. So the capital expenditure is long-term in nature as the business intends to receive the benefits of the expenditure over a long period of time. So you know that capital expenditure is the long-term in nature. So you expect that the company will receive the benefits for the using of the capital expenditure. As for revenue expenditure, this is expenditure on the current asset. Expenditure related to running the business, such as the administration cost, or in running for the business, the company will incur costs on repairing machine, or we need to pay for the utilities. So this is revenue expenditure. Expenditure on maintaining the earning capacity of non-current asset, example repair and renewals. So in maintaining earning capacity, the non-current asset also incurred maintaining costs such as of repair. So this repair is not considered a capital expenditure because it will incur several times. As for the capital expenditure, you need to know, you need to remember this, that it always incurred once. As for revenue expenditure, it will recurring. The cost will be recurring, or it will happen several of times. Revenue expenditure relates to the current accounting period and is used to generate revenue in the business. So in order to get revenue, you will incur revenue expenditure. As for example, the company is going to produce inventory. As a result of producing of the inventory, the company need to pay for the cost at that, which is revenue expenditure. Example, when the company need to pay for the salary of the worker. So this will incur several times in order to produce inventory. And then for the inventory, company will get revenue on it. You also need to know about the asset register for this topic, non-current asset register. So this is a record of non-current asset held by a business. It's also part of an internal control system of organization, because each asset are being maintained separately in the asset register. And it is periodically reconciled to the non-current asset account maintained in the general ledger. So we have two ways of maintaining. One is we maintain in the asset register of the movement about the non-current asset. We just record there, and at the same time, all the entry related with the transaction of non-current asset we also record in the general ledger. So at the end of the month, the general ledger will have the balance of the non-current asset, and also for asset register will have balance for each of the non-current asset of the business, and it will total out for the amount of each for this non-current asset and asset register, and the total amount will be compared with the general ledger amount in the general ledger. So the company will make reconciliation if there are difference amount in balance of the in general ledger and also in a non-current asset register. Okay, detailed heads on asset register may include cost, date of purchase, a description of asset, serial or reference number of the non-current asset, location of the asset where the asset is transport, depreciation method of the non-current asset, and the expected useful life, the carrying amount, which is the net book value of the non-current asset. And now we are going to look at the first part of the non-current asset, which is the acquisition of the non-current asset. Okay, the cost of a non-current asset is any amount incurred to acquire the asset and bring it into working condition. So the cost that we are going to record, the cost that appear in the invoice of the non-current asset, and also cost related to make the non-current asset being used. In other words, that bring it into working condition. As long if the non-current asset is still not in working condition, this cost cannot be recorded. So according to IAS 16, property, plant and equipment cost consists of or excludes the following elements, which is what includes, which is all the capital expenditures such as purchase price, delivery cost, legal fees, subsequent expenditure which enhance the asset. This is we learn shortly. Trial of the test, for example, this one when the company buy machine in order to use the machine, the company will test the machine first. So the cost in testing the machine, it will include as the capital expenditure. As for the cost that exclude from the non-current asset is the revenue expenditure, which is repairs, renewals of the insurance, repainting. So this one's repainting means that example for the building company paint another color, so repaint again. So this is the revenue expenditure. Administration costs, for example, salary of the workers, general overheads, training costs, and wastage. So the double entry to record the purchase is, so you will debit non-current asset. So this one for non-current asset, we must be on specific. What is the non-current asset? Example is the company pay for the vehicle. So the debit part is the debit motor vehicle. And then the credit part, how the non-current asset been purchased, whether in cash, or bank, or by on credit, which is payable, or the company also can use a loan in order to purchase for the non-current assets. So we need to credit the loan. So a separate cost account should be kept for each category of non-current asset, example motor vehicles, pictures, and fittings. I just told you before that this is debit. The non-current asset must be specific. Why is the non-current asset that we purchased by the company? For example, vehicle, we just put this debit vehicle. If the company purchased building, we need debit for the building. And then the subsequent expenditure. So, a subsequent cost on the non-current asset can only be recorded as part of the cost, or we can capitalize it, the cost. If it enhances the benefit of the asset, increase the revenue capable of being generated by the asset. So, the cost that we incur in order to increase the capacity of the non-current asset, so it can be used to generate more revenue. So this is we call that the capital expenditure. Example, this one is a company made extension to the shop building. So by doing the extension, company will provide extra selling space. So by providing the extra selling space, so the company can put more inventory to be sold, so it will generate more revenue. So another one you need to know that an example of substantial expenditure which does not meet this criteria is a repair work. So for the building, for example, any repair for the building cannot consider as the capital expenditure, because this is as the maintaining the routine maintenance for the building. So any repair cost must be debited to the statement of profit or loss, or we can expense it. So that anything that cannot be considered, the cost that cannot be categorized as the capital expenditure, we must expense it and put a debit in the statement of the of profit or loss. Now we do for the depreciation according to IAS 16, property, plant and equipment define depreciation as the systematic allocation of depreciable amount of an asset over its useful life. This is under the IAS 16, paragraph 6. In a simple term, depreciation spread the cost of the asset over the period in which it will be used. So the cost for the depreciation for the non-current asset can be spread over the period it will be used. For example, that if the car can be used for the 10 years, so the cost is separate. We spread it into the 10 years. Match the cost of the using of non-current asset to the revenue generated by the asset over its useful of life. So in order to generate revenue, so we need to use the non-current asset, and it will depreciate the non-current asset, which is the cost related with the expenditure. So this one we will match this cost with the revenue that we generate will be generated for the accounting year. So can be matched to the pattern of use of asset. So in order to make calculation of the depreciation, we need to match the pattern of use to the correct method of depreciation charge. According to IAS 16, the estimated useful life of item of property, plant and equipment must be regularly reviewed and may be changed if the method no longer match the uses of the asset. So a company can also estimate, review the depreciation of the non-current asset. So they can do changing estimate for the non-current asset that we are going to learn after this. So this is achieved by recording and depreciation charge of the year. The effect of the effects of using the dual effect. So what is the effect for the depreciation charge? One is effect in the statement of profit of loss. The first one is the effect on statement of financial position will reduce reduce the value of non-current asset by subtracting the accumulated depreciation because of the effect of wearing out. And also the effect is another effect is in the statement of profit or loss, which is the depreciation charge that match to the revenue generated of the non-current asset. Okay, depreciation may arise from the use of the non-current asset, physical wear and tear, passing of times, example, a 10-year lease on property, obsolescence through technology and market changes, example for plant and machinery of a specialized nature, depletion, of example, the extraction of a mineral from a quarry. So, the purpose of depreciation is not to show, remember this one, not to show the asset at its current value in the statement of financial position. No, it's intended to provide fund for replacement of the asset. Remember, this is not for the to provide fund for replacement of the asset. It is simply a method of allocating the cost of the asset over the period estimated to benefit from its useful life. So, the question, there is question about this one, so you need to know how to answer this one. So according to IAS 16, land normally has, okay, you know that land has unlimited life. So normally the land will increase in value, so it's not required depreciation. For the land, there is no depreciation charge for the land, but the building, yes, because some building will be depreciated and need to be maintained. Depreciation of asset begins when it is available for use. As for the cost that we are going to record, I have explained to you that the cost of the non-current asset that include the cost that to bring it to the working condition. So depreciation also charged when the asset being used. Okay, method of calculation depreciation, we have two methods here. One is straight line, other one is reducing method. So for the straight line, depreciation charge is the same each year, and so assume that benefit is consumed evenly. Useful of asset which provide equal benefit for each year. Example, machinery. For the machine, the capacity or the daily capacity is consistent. Let's say that the capacity is produced 10,000 inventory, so the next day also for the next 10,000. So this is the usage of the machinery is evenly for each day. So this one can be depreciation for this machinery can be done by using this line method. As for reducing method is a reducing amount of depreciation is a charge each year, and so assume that more benefit is consumed in earlier. So for reducing method is the method that used for the non-current asset that the usage is more in the first year or the earlier years, and as the time goes, the usage will be decreased. So we can use this method in charging the depreciation. So example for this one is car. So for the car, you can we know that the capacity, the usage, okay, is more in the early years. As the times go, we need to repair, and the capacity will be lower. And the same goes to the computers. Okay, two method in calculation of depreciation is stated in IAS 16. Say that the depreciation method applied to an asset should be reflect the pattern in which the asset future economic benefit are expected to be consumed. So if the consume or the usage of the non-current asset is evenly every year, so we can use the straight line method. If the usage is more in the earlier year and it will reduce after after the year, we can use the reducing method, reducing balance. Now we start with the straight line method. So this is the formula. Depreciation charge is the cost minus residual value over the useful life. So the term I will explain more. Or it can be simply be given as simple percentage of the cost. Instead of giving the cost amount, residual value, and useful life, sometimes the question will give the percentage the cost of non-current asset in percentage. So in order to calculate, you need to minus also the cost of residual value, and then you multiply the percentage given. So the straight line method results in the same charge every year and is used to wherever the pattern usage of an asset is consistent throughout its life. So this one we already discussed. Okay, what is the residual value? The estimated disposal value of the asset at the end of its useful life. Let's say that after the 10 years of the company, so you know that the car, it can be used for the 10 years. So the useful life is the 10 years. Residual value is the 10 years. So the useful life, for the residual value is after 10 years, what is the amount that the company will get if the company disposes the car. So that one is the residual value at the end of the life of the non-current asset. Useful life. Okay, this is the estimated number of years during which the business will use the asset. So let's say that for example, I give you before is the car. So if it can be used for the 10 years, the useful life is the 10 years. It's not necessarily equal the physical life of the asset. For example, many businesses use 3-year useful life for the computer. So for the computer, let's say the company estimate that the useful life of the computer is 3 years. After 3 years, it doesn't mean that the computer cannot be used. It still can be used, but it may be replaced due to the technological advancement. Buildings are commonly depreciated using this method because business will commonly get the same usage of the building every year. So you say that the rent will always be the same every month, so the usage is the same every year. Or the space also cannot, the usage of the space also evenly used. So this one we can use the straight line method. Okay, next reducing method, which is the formula is for depreciation by using the reducing balance method is the percentage given you multiply with the carrying amount, which is the carrying amount is the original cost of the non-current asset less accumulated depreciation on the asset. So each year the carrying amount will be different because the cost of the non-current asset will be deducted by the accumulated depreciation. So this one, reduction method is always applied for the non-current asset that have the usage. The usage will be reduced for later year. So for example, for the vehicle, so more usage of the vehicle year, the year it will be need to more maintaining, so the usage will be decreased. So this is accounting for depreciation. So we need to debit expenses, depreciation expenses. This one will go to statement of profit and loss, the first effect, and the second effect we need to credit accumulated depreciation, which is the contra account for the non-current asset. This one will be reported in the statement of financial position. So in the statement of financial position, it shows a reduction in the cost of non-current assets. We will reduce the non-current asset by deduct the accumulated depreciation. So this is a presentation of the non-current asset. So the cost will be deducted with the accumulated depreciation. So we have the carrying amount. So next you will learn about the asset bought or sold in a period. If the non-current asset is bought or sold in a period, there are two ways to which depreciation could be accounted. One, provide full year's depreciation in the year of acquisition and none in the year of disposal, or monthly or pro-rate depreciation based on the exact number of months that the asset has been owned. So this one we will learn later. As for today, we just learn up to the depreciation charge. So for the example for depreciation charge and a calculation we will do in the tangible of non-current asset part 2. So see for the next video. Thank you.